Good evening, everybody. This is Jeff Scott. It's only 1:12, but it's dated 1:13 for Sunday. It is Saturday, about 7:22. Football game's pretty boring, so I thought I'd do this in between the two games. For those that are new, welcome. For those that are new or frequent flyers, if you could do me a favor, you know I don't charge for this, but a favor would be if you could click on the like button and on YouTube, and also hit the subscribe. That way you'll get notice when these are placed, because sometimes I don't always get the, I don't know why it's doing that. I don't have another. All right, well, let me just do this here. I don't always, sometimes I will not get the emails out right away. So I titled today, Does Past Support Become Resistance? This market's obviously doing very well. It's been an incredible 13 days. I mean, I'm not sure how many trading days there's been. I'm up 37% on the year. It's kind of like deja vu back to last January, except this time I'm not buying another boat, so there won't be the boat indicator to sell the market. Disclaimer, this is for education purposes only, and recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent, which means I buy my own programs. No one says for me to say anything good or bad, and trading involves risk. You and your loan are solely responsible. I do have folks that I have learned from over the years, and specifically for the purposes of tonight, I started in Cancelim by O'Neill, Improved by Morales and Catcher, Taken to the Computer by Ian Woodward, his partner Ron Brown from Woodward and Brown Investing. My buddy George Lee, who's just a great trader from the Pacific Northwest, who I a couple times a year get to share the podium with. Van Tharp, Position Size and Money Management King. Superior Profit, this is a program, a company, it's in Singapore, I believe, so it's .co, that I've gotten to become attracted to a number of their indicators and some of their programs, which I'll mention. And my buddy John Person, who is an author, mentor, developer of some great software tools, some of which are free in Thinkorswim, most of which require an additional payment. And we've become fast friends as well. I have a lot of things on my computer. I need TradeStation and Thinkorswim with all the different products that I purchased. HGSI is my go-to program for analytics. It's funny, this weekend I went to a TC2000 program. I still can't do the sorting and the fundamental things that we do within HGSI and scanning on some of the technical things. But I think the most amazing thing was there was probably 200 people in the room. Probably some of it was because it was free, but this was in Fort Lauderdale, and I know how hard it is to get 25 people to come to a paid program. EdgeRater is I supplement HGSI with EdgeRater and Superior Profit, and then I do seasonality and a number of websites. This is the only promotional thing I do, and I do this out of respect to George Roberts, highgrowthstock.com. I pay for the product. I use the product, and you know, sometimes I can call up George and ask him to add something because of that relationship I have. That's about it. Investing strategies, you'll find hundreds of videos from me, Ron Brown, and others. And under free 30-day trial, you can get a trial to the program, including no credit card. Stock patterns are cyclical. It's sure feeling like we're up here and about to have a run up. But if you think back to last year, so many times I thought we were running over, and we just had a continuation to the upside. So is this the opposite, and it feels like we're turning around and going up, and we're just going to come back down? Time will tell. I think the risk is higher than it was 2 weeks ago. Certainly December 26th was a turnaround day for this market, but we could be starting a new leg up. I don't know, neither do you. Because of that, I've been tepid with how aggressive, but I've been aggressive. I bought stocks and calls. I haven't sold many puts because I still think the market could go down. I have done more covered scenarios where I'm going to take smaller profits but with lower risk. I haven't done many put spreads yet. I've taken off almost all my protection. I can only imagine what my gain would have been if I had no protection to the downside. I still have cash and less positions than I did in, say, September. Sector review, you can see pretty much broad spectrum mixed bag, but more heavy to the green than the red. If you look at Thinkorswim, I'll just talk about it here. Upper left is the E-minis, then the NASDAQ futures, and then the Russell futures on the bottom, the Dow futures. The bottom is the Russell futures, the VIX, and the dollar. So the dollar strengthened at the end of the week, but certainly fell early in the week. The VIX has been in free fall, but it's not down to where it's been prior. Notice that on the E-mini, the NASDAQ, and the IWM, we're approaching that falling 50-day moving average, and I think that's a natural place to expect this rally to stall. We'll talk about the high, low, and the middle road scenario in a little bit. But clearly everything has had a nice move. If I look at the weekly charts, you can see how the E-minis and the Russell getting a pretty deep penetration of the 200, both penetrated their 200 weekly moving average. Now rates, I called them steady. They actually bounced up a nibble this week, but it's interesting. There was very little change in the rates, but the yield curve is shown in the blue, continues to head towards flattening. As I have said before, if you look at the S&P in blue and the yield curve the yield curve in pink and the S&P in, you say this one more time. The yield curve in blue, the S&P in pink. As the S&P falls, as the yield curve falls down to flat line, the S&P actually goes fine. It's probably when we go into a recession and the Fed starts loosening and the flat yield curve resolves is when the market sells off. So again, falling yield curve here. Eventually one expects the market to fall, but maybe not until the yield curve actually starts to go up again. AD lines on both the small stocks and the big stocks turned higher. And if you look here at the NYSE, clearly not up to prior highs, but we had a big rebound on the AD lines. All the indexes turning up. You can see what they are up in the upper left-hand corner. And the bonds actually stumbled a bit this week. Probably because the interest rates actually moved up a tad, and maybe there was less risk in the market. Now, on this chart, I think there's a hidden story. As you could see, the number of stocks above the 200 and above their 40-day moving averages increased. Now, if there's more stocks above their 40 than they are above their 200, that tells me the 40 is probably below the 200 and suggests that you have a lot of stocks that are in downtrends, which is exactly what I saw on my chart review. But my 3-month new high, new low, which is a very short-term indicator, actually shows we're getting almost to oversold areas. So short-term becoming somewhat oversold, longer-term still got a long ways to go. Now the daily McClellan, you could see how the oscillator ripped up with the recovery of the S&P. And we'll look for divergences someday, but not right now. What I really want to point out on both this and then the weekly is notice the S&P. Here's sort of a V bottom, but is it really a V bottom? Because there's 3 times it came down and touched, and each of these were relatively complex. So is this it, or should we be coming back down to touch? If I look at the weekly, again, this was a V bottom here, but the next 2 bottoms clearly were more complex, as was this up here. So are we going to be lucky and that's it, or do we probably have some downside? I'm going to go with we have some downside. The buckets, here's how we've gone to almost overbought here, with 90% of the stocks, the S&P 1500, now above their midline, their Bollinger Bands, where on the 24th, after the horrible market day, 99% of the stocks were below the midline of their Bollinger Band. So that's a significant difference. Over 45% of the stocks were below the band, so we knew a recovery was imminent, at least a bounce. And you could see we're not overbought here with very few stocks above the Bollinger Band. Hindi free zone, I like to call it, because they haven't had a Hindenburg omen since, you haven't had a Hindi omen since October. And why? Because that's when the market started selling off. And to get the Hindi omen to fire again, we're going to have to see some new highs. and we're nowhere close to that. Market tone, decidedly bullish. Sorry about that. As you can see in the Woody indicator here, everything is green, and the sector strength is green across the board. So this market clearly has improved. Canaries in the coal mine. Now, last week or the week before, I talked about how they were in the midst of a channel and that I was sort of expecting them to pull back after they ran up to the channel. Interestingly, that's not what happened. They broke out. They've even gotten above their 50-day moving average. But I also would point out, if you see down here, the volume has been coming off. Now, the holiday is gone. If anything, last week should have had decent volume. So I just called it as it was, that there's a breakout, but the volume is not impressive. The Q report shows me in whatever color this is, maroon, that over the last 5 days, every major sector is up and being led by energy. On Friday, interestingly, the only down sector was energy. When we looked at where the strength was, and we'll go down to the bottom at the sector level, look how consumer discretionary has moved up over the last month. Information technology has moved up over the last couple of months. Staples, communications, real estate. Financial looked like it was moving up, but it's sort of stuck in the middle right now. Energy, which had been leading on Friday, was the weakest. Now we'll see if that's a one-day wonder, because over 5 days it's still the most impressive group. I thought I'd look at what was in information technology, and as I drilled down, these were some of the groups, and some of the best performing ones were electric components, the semiconductors, equipment, and manufacturing. We'll see some stuff on semiconductors in a few minutes. Know your news. The red dots are big deals. So you got the PPI. Whoops. On Tuesday, you got retail sales and petroleum on Wednesday. Housing starts, jobless claims, Philadelphia Fed, business outlook on Thursday, industrial production on Friday. I'd say that's a mixed, at worst, week. You do have on Tuesday, a number of Fed heads speaking. Of note, the Fed heads have now started talking down rate hikes, and that has boosted the market, which is opposite of where it was before the Christmas Eve massacre. I went with the larger group looking at the next couple of weeks here. Earnings are out for real this week. And I suspect if you look at the top line, you have some of these. Clearly the banks with JP Morgan Chase, Wells Fargo, Citibank, Goldman Sachs, and Bank of America, PNC on Wednesday. So we should have a pretty good feeling of the major banks after the first 3 days. Delta's already pre-announced some weak numbers, so they probably have already got their drop booked in. The big one for me will be Thursday after hours for Netflix, American Express, Team, which has been a big mover, Schlumberger, one of the oil service stocks, which have been hammered. So, as I say in the lower right-hand corner, judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. We'll talk a little bit more about Netflix as we did last week in a few minutes. Market thoughts. We've certainly had an impressive rally off the Christmas lows. Futures demonstrate a move into resistance. Most likely we pause on up move and retest, setting up a W bottom, but we must be prepared that this is a V breakout, a V bottom and a breakout. Bottoms up show more stocks setting up than the last few weeks, a few obvious shorts. Take a look at Google. Put on your seatbelts as earnings season takes center stage, and news will still drive the markets. Trump and a potential impeachment. Cohen getting subpoenaed by the House. As I said, the Fed supportive, their puts back on, and the border wall becomes a bigger issue as all these Fed employees are being saddled with no checks. Now, just to go back up to that third bullet point, I'm betting that at some point we're going to pause. I'm going to show you why. That will be my middle road scenario. Doesn't mean we have to pause. And frankly, right now I'm more positioned for the market to go up, but I'm prepared to quickly change. Seasonality, this is best choice. Last week I had Magenta and Seasonality Trader, just showing I'm an equal opportunity provider in that I actually buy all three of them. For reasons that I have no idea, except once I turn something on, I'm not good at turning it off. I thought I'd show this one today for a couple of reasons. Best choice says the time to buy is the 21st and the time to sell is the 4th. I think it depends on what day's earnings is, and I'm already in, and we'll talk about it in a few minutes. Over here, it says that the 13 wins, 1 loss, 92.86% positive, average profit 18%. And then if you look through the years, even in 2007 and 8, when the market was flat, or it was down big, it was actually a flat stock. Some of the biggest gains have been more recent, and last year we just had a massive move. I think some of that massive move is already in the market. Speaking of the market, where are we going to go from here? High, low, and medium in the middle scenario. The high road says we had a big run up, pulled back to the 200-day moving average, traded up to all-time highs, broke through the 200. We had broke up through the 50 there, traded all the way down here to 23.44, give or take. And then we've had a rip-roaring move back up to 2,600. So I have 3 potential scenarios. Scenario number 1 is that we're going to reverse somewhere between here and these double lines, which is a little bit less than 2650, and getting to the 50% retracement of this move, which corresponds with the 75% retracement of the prior move up. I think that that is the most likely scenario, a little bit more room to the upside. Then we fail at this line and come back and retest down here. Now, if we hold down here, or if we reverse before we get down there, then we'll start to think about a much higher move. So that's move number 1. The middle road scenario says we go up further, maybe approaching one of these 2 obvious resistance lines, and perhaps somewhere near the 200-day moving average, we reverse and come down, or we reverse and just chop in between the 200 and the 50 for a while. That would be my middle scenario. And my high road scenario, which I highly doubt is going to happen, is we get above that 200 and we go up here and we try and test the prior highs. If we got there, then I expect a pullback here and then a bounce and take it out on the second or third attempt. It remains to be seen. Now, last week I talked about how Netflix, although the chart is not nearly as good in 2019 as it was in 2018, so this would be end of 17, beginning of 18, end of 18, beginning of 19, that there were similarities, that there were multiple kahunas and pocket pivots and multiple kahunas in 2019, a break above the 50, a break above the 50, and then we talked about what happened after here, and I believe that would be right here where the market basically traded up, gapped up, and ran up to 400 plus. So last week I had told you I had purchased a call spread 263.80. That was expensive. About $20 for that spread. And out of the money call 300, 330. That was pretty cheap. I think that was $10, so I risked 10 to make 30, or minus 10, it goes 20, so a double. This one I risked 20, but the upside was 120. I didn't even think we would see the move we saw. Both were profitable that week, last week, with the money went up $80,000 after being in the trade just a few days. I thought risk was higher this year, but seasonality is seasonality. So I went into this week planning on doing something to, that I don't need a $40 or $50 call in the money before earnings, because I don't want to lose all that. I want to put it in the bank. So this week, Netflix was up another 13.5%, about $40 a share. I decided on Thursday to lock in profits, and I closed that 263.80 bull call spread for All right, I'll call it what it is, a huge profit. I wanted to keep in a position but limit my downside, so it was time for a Scott synthetic. I bought synthetic stock for 74 cents. That meant I bought a call and sold a put at 320. That would have the exact same P&L curve of buying the stock. I did a married put or a protective put at 310, which cost me $18.53. And I decided that I would sell something way out of the money, probably too far out, for $3 at 390. Thus, I now control $70 worth of gains in Netflix for $16.18 and cap my additional loss potential at 310, which is a substantial improvement over sitting on a 260 call where I could have lost all the way down to 260. I will likely close the short position, which would be the short put at 320 and long put at 310 before earnings. Well, what happened this week is remarkable. The green box incorporates the 5 days. We gapped up big. We stalled a little bit on Wednesday. Strong day on Thursday, gapped up Friday, and took on multiple upgrades to about $400 on the stock and took out the 200-day moving average. Right now, this is one of the strongest, if not the strongest stocks in my universe, and one of the few stocks that's actually taken out their 200-day moving average. The weekly bongo has turned green. Now, here is the position that I put on. So what I wanted to do is I wanted to find something that was not going to cost me a big share of the $60 a contract profit that I had on the prior 3,000 shares or 30 contracts. So I was willing to spend about 15 or 16 of that to buy a new position. That meant I put away about $130,000 of profits that I kept, and I let some of it roll. So I bought a 320 call for $23.71. I sold a put for $22.97. So net I had to pay 74 cents for that leg. I then bought a protective put for $18.53. What that did is it's going to give me the gains, and we'll talk about where the gains get stopped out. But instead of having an unlimited loss potential and giving back all that money I've already made, I cap it at a 10-point drop. I then sold a call up here, which I thought was a long way for the stock to go on earnings, and I got paid $3.09, which reduced it. So in 2 days, this trade is up $24,000 on an investment of $48,000. So that's not too bad. That's a 50% return in 2 days. So now I'm sitting here, and I'm going to probably do something with this spread as well and keep rolling my call up and out. I don't want to be so deep in the money that if they blow out earnings, I take a big hit. I'd rather limit my downside, hence why I bought the put. So that's where I sit with Netflix, and let's go down to our top-down review. So we already looked at Thinkorswim. Let's just go look at TradeStation, see if it works today. So the E-minis, and this is where the markets have changed. We now are in clear buy signals. We're still within the envelope. We've got green bars, which means the buying window's open. E-minis look great. We're still in a sell signal on the weekly and the monthly. We've gone to blue bars on the weekly, which tells me there's some buying coming in. Our high jump bars move all the way up to 67%, but it's nowhere near excessive. We see no dots for divergences here. I think the E-mini looks strong, and even if it pulls back some, I expect it to go higher. If I look at the NASDAQ futures, ditto, same story, nothing more to say. If I look at the Dow futures, ditto, same story, nothing more to say. If I look at the Russell futures, same thing as well. So I've got a market that's bouncing. The fact that the weekly and the monthly are in sell signals tells me that we call this a counter trend rally. If we look at the dollar, it strengthened at the end of the week, but it's still in a sell signal on the daily and weekly, but on the longer time frame, it's in a buy signal. And I thought I put the VIX in here. Let's see. Yeah, it doesn't matter. I already showed you the VIX is going down. And then I know a lot of people are into gold and silver. So gold, these red dots tell me gold's probably coming down. It's had a huge run. It's in a buy signal on daily, weekly, and monthly, but probably it needs to pause a bit. Maybe it will only go sideways. Gold miners have already started going sideways. Oil bounce here is probably what's driven the markets higher. Fortunately, I bought some oil stocks when it had fallen with these green dots telling me it was likely to bounce. By the way, those green dots are an indicator from Alexander Elder. Bonds had been strong, and you can see they're in a bit of a pullback here. But on the weekly and monthly, they're still in buys. And the other thing I wanted to show you here, is there anything I want to show you here? I thought there was. Biotech's been on fire. I think I talked about it last time. I showed you that I had LABU at 28. It had a nice move. Biotech is, like the indexes, is getting into, it's had a big run. I was at the JP Morgan, formerly H&Q, Healthcare Biotech Conference last week, which was fascinating, seeing all the new stories and new drugs. And obviously what no one saw coming was Celgene being bought by Bristol Myers Squibb, which really stimulated the LABU, which is how I play biotech for the most part, because I have contracts with a lot of the companies in biotech, and I have in my contract is I'm not allowed to trade their common stock. If we look at LABU, which is an amalgamation, it looks just like the IBB. This thing has ran from 25-ish here, 23, all the way up to 47, and that was in maybe 10 days since December 24th, 10 days of trading. So markets are clearly strong and exciting here. Let's go into HGSI and see what I saw on my weekend review. I'm going to go into market analysis user groups, Major Markets Plus, and it's going to bring up the 24 things. Let me adjust the space here, and let's go to a top-down view, which is price and volume only. And what do I see? I see small caps, Russell, industrials, biotech, semis leading, so you know growth stocks were in fuego, and we see treasuries. Interesting, S&P 500, NASDAQ S&P 100 were laggards this week. Let's take a look at the S&P 500. We already looked at it, the index a little bit. Now we're going to look at some different views of it. Let's go into, so all you can say here, all I can say is that it's in a downtrend. We've had a nice move off that downtrend. I still expect it to turn around at some point. Question is whether it runs up to the 50 or the 200 or it falls over before then. If I could look at the Dow Jones Industrial Average, looks the same. I'm not going to spend time on things that are the same. The NASDAQ Composite looks the same, and the Russell Futures, the Russell ETF looks the same. So everything looks the same. This is a very broad-based recovery, and we'll see how much room it has to go. The easy money has been made on this recovery. The dollar has fallen with the recovery. It bounced on Thursday, Friday. That could be a headwind if it starts to go up. As long as they keep talking down rates, I suspect the Dow will fall further. Not only was the Dow down, but volatility has come down dramatically, which is great if you're long stocks. Now that's hurt gold. I think part of the gold performance that we had been seeing was, I know it's here somewhere, was related to risk on. And you can see perhaps a little bit of a wedge forming here on gold. And as I understand wedges, they resolve one way or the other, and that's the way the market goes. So you've got a wedge here in gold. We'll see what happens with gold. And if we look at silver, maybe a little healthier, or not healthier, but less likely, less oversold, overbought rather. The gold has had a much bigger move with that 200 than silver. So After I look at the major markets, I then go into industry groups, which is 7. Hit the warehouse view, they pop up. I like to rank these industry groups by 2-day force. And you can see that right now we've got 76 groups to the upside. Over a 5-day window, we've got 90. If I look at the downside 2, I've got 11. If I look at the downside 5, I have 6. What does this tell me? This tells me that on the short and medium term, that these markets have really strengthened a lot. And there's a lot more bullish looking industry groups than not. On the 2-day, most recently turning down, oil exploration was down 1.3% on Friday, but up a lot. You notice every one of these groups was up decent on the week. So hopefully this is just a 1-day blip. Exploration, internet, electrical power, integrated oils, investment managers, steel raw, entertainment, steel, cement, base metals, agriculture. A lot of commodities in this group. Maybe they fell because the dollar stiffened a bit. Let's go look at the top side. Let's look at the first couple of groups. I said I was going to show you some semiconductors, so let's take a look. Now, my initial impression is, do I really want to be buying NVIDIA? And this stock is broken. And so let's take a look and see if first impressions can sometimes be wrong. Obviously, the stock has had a big tumble, but now we've got higher highs, higher lows. Have we started a new uptrend? We had a kahuna. Volume has been good, pocket pivots. The earnings per share growth has slowed, which is a reason to be concerned. I think NVIDIA can run up to this 160, 163 range and might be a bellwether of when this market rolls over. I like NVIDIA here. AMD, another poster child. Here's my little graph that I say every stock does this in every time frame. Well, it's sitting down. It's actually based now for about 2 months. It's at I think, a good buy point. It had multiple kahunas, mobile breakout from a squeeze. Don't like the earnings per share contraction, but I think AMD can be bought down here. Look at the demand supply. Micron Technology with its falling earnings, I'm not interested. But one thing they said on CNBC that made a lot of sense is you buy these stocks before DRAM prices turn up. Don't wait for them to turn up because the stocks will move. It's butting up against its 50. I like AMD and NVIDIA better. Intel, not quite yet, but a break above the 200-day moving average might be interesting. Broadcom, Qualcomm I liked as well. Again, like AMD, it's been basing now for a couple months. Do you want to be safe and wait for it to take out the 200-day moving average, or do you want to get in with a break above the 50? I think Qualcomm looks good. Let's just look at NVIDIA and Qualcomm in TradeStation because I saw some things there I believe that I liked. Let's see if I've got it open here. So here's NVIDIA, and I won't do that until I do this, one of these. Try it one more time. What did I like about NVIDIA? Notice the histogram and OBV and the market catcher are all going up while the thing is falling. It had a high close doji and a new PPS on the weekly on Friday. It's in a daily, weekly off of support. I think NVIDIA goes higher at this point. Qualcomm, I liked it because you've got a buy signal on the daily sitting right on automated generated support. Your weekly's on support. I don't have a buy signal here, but I did have the prior week a high close doji, or it looks like a high close doji. I don't think it is. It's just a red bar. So I think Qualcomm looks interesting. So there were a couple of technology stocks that you might want to go visit. Other consumer products. Can you say Mary Jane, marijuana? Tilray had a huge day with the Bible gap up. We'll see that later. Canopy growth. Here's that pattern. Not much of a base, but a kahuna. and then a breakout Bible gap up on Friday. It kind of looks like a doji-like bar there. So I don't think I'd be buying this until it declared which way it's going to go. But something is going on with marijuana. There were a number of marijuana companies, including that one, at the meeting. I think they had an investment. Kronos Group is one that I own. They've had an investment, I believe, from Altria, and that one looks pretty good here. Autos, you know, it used to be about Tesla. Look at GM, and I think one of the things that is promoting some optimism on these is that they came out and said they're going to have more cars in 2019 than 2018, and 2018 was a good year. Earnings per share aren't that good. 4% dividend is good, but a break above the 200-day moving average with a kahuna, that's 3 kahunas in about 6 trading days. Bongo's gone to green, coming out of a squeeze. That's very promising. I am less certain about Tesla. You can argue that charts are not that much different. They're both kind of messy, but look how tight GM was, and look how loose Tesla is. And then Ford also made the list, but it's still way down in its pattern. Casinos and gaming, I've wanted to get back into Wynn for months, but I've been afraid to. Is it time? Probably not, but let's see what we got here. So Caesar Entertainment, I mean, they know, I think they said Icon or one of the other activists is in it now, so it's popped up. Doesn't make any money, huge PE, clearly under demand there because of an activist. Not my style. MGM, you know, getting close to breaking above the 200, a little bit more interesting, 1.7% dividend. Look at what happened to Wynn. You know, this was when Steve Wynn got into trouble. Then everything seemed to be fine, and then China slowed, and much of their revenue comes from Macau. Now they've broken above the descending 50-day moving average, and maybe it's okay to get in. Not yet for me. I don't like its earnings per share growth, and I'd like to see some stabilization in Macau. I'm not sure I'm ready for Penn. I did like Boyd Gaming, which them and Penn look very similar. They've got earnings per share growth above their multiple. Kind of like the market working their way up. I could certainly understand not buying one of these, but if I had to, I'd probably buy Boyd. Telecom carriers, you want to buy these when they're cheap. Pretty soon it's not going to be cheap anymore. Let's look at AT&T and Verizon. These are clearly widow stocks, and that it's a good place to put your money. This pays a 6.5% dividend. If you had bought it 2 weeks ago, you would have had a 7-point-something% dividend. Now, clearly in a downtrend, but it's moved up off the lows. If I put on a weekly chart, if I can, let's see. Maybe not, maybe yes. There we go. On a weekly chart, you can see that it really is an ugly chart, but it had a high closed doji here to move up. You know, if I bought AT&T, it's because I want to buy it cheap. It's certainly cheap going back looking at the last 5 years. And I'm buying it because I want that dividend. 6.5% is a pretty nice dividend today. Verizon pays 4.1, a lot better looking pattern. Buying it off the 50. It's not as cheap as AT&T, but it does pay a pretty nice dividend as well. Probably a better acting company. T-Mobile stock looks good, but I won't touch it because it's in M&A with Sprint. Don't know anything about Zio Group, but it's now taken back its 50. Does not pay a dividend. All these stocks look like they were under accumulation. IT services, I mentioned that earlier. I wish I would have gotten to this earlier, but Infosys is still a cheap stock. It's had a Bible gap up. You know, I might set a buy stop above the top of the Bible gap up. It's only about 30 cents away. Why buy it before then? Because if we're right up to its double top there, I like to see it clear that, but this is clearly a big move and one that I might be watching. Had a kahuna with that Bible gap up. Luxoft Holdings must be a takeout. DXC Technology low in the pattern. Science Applications low in the pattern. I don't like these stocks, although they're all up off their bottoms. They're below the 50, they're below the 200, and they've all got a lot of work to do to get above it. That's what happens when you've had a sell-off like we've had. Specialty Pharma, there's a couple things here I like. Amarin, you know, give my son some credit. He actually found this one on his own and has added to it. They've got some potential cardiac benefits to their fish oil product. They are clearly a takeover story, probably a takeover in the mid-20s, maybe 50% gain from here. What I don't know is when that happens, but Bible gap up on Thursday, on the rumors, sideways on Friday. You know, you had a 4 to 22 high tide flag. You pull back. So from this point here, about 13, I'd expect you to get 60% of 18. I wouldn't be surprised to see us go back up to 24 on its own. I think this is a buy right here, and I agree with my son. Mirati Therapeutics, don't know anything about this company, didn't hear them in JP Morgan. Big move up, getting expensive for a stock that doesn't make money. Axosome, good story. I think both of these are potential takeover candidates. Acadia broke above the 200, still kind of in the lower right-hand corner stock. The one I like is HZNP. I've been talking about that for weeks. I don't know why it didn't make the list here, but you can see HZNP, probably because it doesn't have as much volume as the others, was up on Thursday and Friday. Sideways move, but looks like it's getting close to a breakout. Horizon Pharmaceuticals got good earnings per share growth as well. REITs, as rates have come down, dividend payers have gone up, at least some of them. You can take your pick. I think I like the next one the best, not this one. This is Equinix. Now, I'm always looking at what these companies do 2 times here. Colo, so it's a data center one. Don't like the pattern. It's an expensive stock, but it pays a dividend. It pays a 2.5%. Ventas, it's a medical REIT. I think it's got elderly care places. Uptrend, pullback, turnaround here, 5.3%. Another place with Colos, Digital Reality Trust, Welltower, another health trust. Again, nice uptrend. Probably the best looking chart of the day from an uptrend perspective. Good earnings per share growth, short term, pays a 4.9%. Duke Realty, Prologis owns a lot of warehouses. Here's another one, looks good. Reality Income Corp. And this is another one of the it's all about monthly income. Long-term lease with national retail chains. So there's some things to like here, and I do think the dividends are what's driving it. Because I showed you something I like. There might be some more to come. Back. Ninth Group Life Science. Illumina is a really nice company. This is some other companies in the same space. So let's look at a couple of them and see if there's anything here that we might want to be looking at. All the comments and things that you might be reading about, which are precision healthcare, molecular oncology, targeted therapies, these are all the companies that provide the different things for testing. TMO, lower left, upper right, it certainly got loose up here. Moderate earnings per share growth, not that excited by it. Biotechny, big pullback. Look at the pocket pivots, the kahunas, increasing volume as it works its way up. PerkinElmer, similar story. This was now broken. Look at the group strength here. It's now broken above its moving averages. That looks interesting. Agilent, Abbott, which is more testing. So far, I think the one I like the best is PerkinElmer. All right, so that's another group to watch. And then lastly, communication equipment. I bought Ciena about 10 days ago. Here's some others in the communication equipment world. Cisco, kind of sideways here. Earnings are out soon, February 13th. Novatel Wireless. Pretty nice breakout. It's done this before, as you could see back here. Big move. Doesn't make money, no dividend. I have no idea. Do your homework. was the only thing above the index. So those are the top 10 groups. Just below the top 10 groups, diversified banks. So their earnings are out this week. Bank of America clearly interesting here. Is it time to buy? I'd rather wait and see it get above that 50. It's been in a downtrend really since March of last year. With the tightening, you would have thought, or not with the tightening, with the raising rates, maybe I would have expected banks to do better. But if nobody's lending or investing because of higher rates, they won't. Let's see if this can't get some of the banks going. Citigroup, Wells, they all look exactly the same as Bank of America, as does JP Morgan. Also looking up airlines, which is somewhat interesting because Delta pre-warned. But the one I like, and this is the story of my life. My son asked me a few weeks ago, what's the best stock to buy in the market? And I suspect we were about right here where my head is. And before Thanksgiving, I said, I'd buy Azul, A-Z-U-L, a South American airline like the breakout. And of course, he bought it. Breakout failed. He sold it. Now we're getting out to recent highs. I think Azul and GOL look about the same. And they look very good. I also like Spirit, but this is not a simple trade because it's a stock that is known to have volatility. Compare that with Delta, United, and American. Lousy, that's Delta selling off on report. It was already on its way down. Here's American. And here's United. Gold, Azul, and Spirit look a whole lot better, though United's had an interesting buy point sitting right on its 200-day moving average. So that was my industry group review. What I then did from the top down, then I looked at, today there wasn't as many stocks to look at. I looked at how many stocks. I looked at 588 securities. From that 588 securities, I added them to the weekly high close dojis and the John Person trilogy scan. And then I scanned them all within Person. And I ended up with buy signals of 66, which is the most I've had in a long time. Before I get them, I want to talk about the shorts. I did not find a lot of shorts. I did find some. Here's what I like to short. Believe it or not, number one is Google. And I'll show you why here and then on TradeStation. So Google is clearly in a downtrend. This is when you would have wanted shorted it. I would have liked to see it run back up to the 200, but I've got a low close doji here after a dragonfly. This is a stock that's in a downtrend. If I go into TradeStation, you'll see the pattern that I like to see to short. And JP sells, Google. And look how it's right up here on support. And it's got a sell signal come in on the daily. And it failed at support on the weekly. Google L and Google no L, both with the exact same pattern, look like perfect short setups. Now, be real. If the market takes off on Monday and runs to new highs, these will go up too. It's the market that matters. Amazon, this is still one of my holdings. I didn't go put my puts on. We'll see if that was a mistake. Sitting at resistance, but with buy signals on both the daily and the weekly. But I'm going to be watching this like a hawk. What I've done is when it's got sell signals in, I buy puts. When the buy signal comes back, I take that puts off. So right now we're in a buy signal on the weekly and the daily, but we are right at resistance. Triple Qs, just to give you an example of those, clearly in a downtrend. I don't have sell signals, but I'm right up against resistance. If a market was to roll over, these might be interesting. Let's look at some of the longs that I saw, and let's look at in here a couple of them. I mentioned Azul. Azul right off of support here with a new buy signal breaking out to a new high. I mentioned Horizon already. Horizon, here's a trend line support. It's been moving up off a trend line for a couple of weeks. Tandem, as you know, my stock of the year last year from $6 to 52. A new buy signal on the weekly and on the daily. And by the way, I did give that out on April 8th. April 8th or March 8th, I gave it out on the video, and I did it at a live meeting. Tilray, I mentioned, had turned around nicely. And look how Tilray had a high close doji on the daily and the weekly coming off of a squeeze. This one looks like it can go higher as well. Let's go back into HGSI so you can see my buy watch list and see if there's anything else I want to comment on. Let's take a look at industry groups. Just make this bigger. All right, so the first three things, I don't know why they don't have an industry group. Biotech, Coca-Cola Enterprises, and Tilray. I've got 3 airlines, application software, biotech, a bunch of REITs, a bunch of semiconductor devices. A lot of things to go through here. We've looked at some of them. Let me see if there's anything that needed talking about. Exelixis is a stock that I've been watching for some time. It finally broke out. I think this is another potential takeover candidate. They've got some big news this week about expansion of one of their drugs. Owens, Illinois is a boring name, a container and packaging company. Had a big week, broke out above the 200. Has earnings per share growth. I'm going to watch that one. Breakouts have been failing, so I didn't say I'm going to jump into it, but I'm going to watch it and see how it does. Bed Bath & Beyond had great earnings, and it bounced. It's still kind of a bottom fish, but look at all those kahunas, even before earnings. Something's going on with John Pearson's least favorite store. Lumber Liquidators, this is a stock that's just been in a steady downtrend. I call this bottom fishing. Yes, this is kind of sideways now, and a bunch of kahunas came in a squeeze. Obviously, it's got a lot of work to do. PerkinElmer, I mentioned earlier. I think this is an interesting play, bouncing above its moving averages there. Tandem has been my big winner, continues to look good on the daily chart there. Many of these we've looked at before. One that I did manage poorly was Ulta. I bought it before earnings. I got stopped out. It fell further, and now it's back to where earnings were. I should have held on to it. So I'll leave you with a picture of what my longs are. And then I just want to go into, that's what we'll go into. I run seasonality on EdgeRater as well. And if you have EdgeRater, you really should be doing seasonality now. When you run seasonality now, you get the left-hand side of this graph. Then I save an Excel spreadsheet, and then I open it up again. And then I go into this, and I start to look at 1 month, at least 8 high up years and no more than 3 down years. I look at by performance in that group, and then percentage wins and a score, which is percentage wins times the average move. So you can see the big mover is Netflix. Denny's, DENN, also makes the list. Now, I'm not advocating Denny's, so don't go out and buy Denny's on my accord. But I will tell you that it's sort of an impressive looking chart. Let's take a look. Breaking out. This was a viable gap up. It's taken 2 months to get back to that. And it's got very strong seasonality, as you could see. Here, a score of 9, but up 85%, average 10%. To the downside, the winner or loser was Energy Resources, ERII. That's a pretty strong number, 10 out of 10 down over the next month for a return of minus 15%. So on that note, I'll just leave my buy watch up again. So if anybody has interest for whatever reason of what I'm looking at. Let me just say a few more things about what do I do with this. I will then load this into Thinkorswim. You know, I am the only idiot in show business that actually shows you his real account. I took this one down to about $1 million. It was about $1,030,000. I bought some boats. I moved some money around. I figured I'd get it down to about $1 million so I could see performance. This is performance year to date on $1 million portfolio. That's $371,900.87. So that means my $1 million portfolio is up about 37.2% on the year. I have a lot of the stocks that we've talked about. I did go into Apple. I've got some $150 calls, and I sold against them a cheap put. I'm long the 150s and short 235s. I have my Amazon position. I have 1,000 shares left, and I've got some calls. Bank of America, Chug, which has been a nice mover. I mentioned Sienna. This was an inexpensive trade. 40 calls at $3 a pop, so 12,000. It's up 7,000 in just a couple weeks. Continental Resources, CNC is an insurance. CSIQ, which I just have a put spread on, a bull put spread. So that means I collected some premium, 32 cents, and risked $1. So the most I can make on that is 3,200. Here's an energy play, Ecopetrol. Etsy, which is a like Amazon, but for, I guess, homemade goods. I do have some gold on. Probably will take it off. GameStop, I made some money on it recently. This is a potential takeout candidate. I may get bored if it doesn't get taken out soon. I bought Halliburton in the hole when it was after it got beat up. I made a few bucks on these options. Notice most of my initiations are with options. Heron has got a great pain drug coming. Small position there, which I didn't originate until after they came out and said that they have a FDA decision in April. Horizon, I mentioned. Here's my LABU. 2850 calls, so I will hopefully get these called away. But this has been a big profit position, most of it this year. Netflix in a couple different positions, a small gold company. Pfizer, my big loser here is another small gold company. I got a TLT position. And then I've got a bull put spread, meaning I sold the short-term put, in the money put, and bought out of the money put for protection. The difference there was about 90 cents, just to pay a small amount of money to pad my return. And then I'm playing XLF into earnings, but it hasn't done anything yet. Those are what I have. That's the return I have. And yes, I do margin, which does grease my moves up and, unfortunately, my moves down. On that note, I just want to show you one other thing. No, it's too late. I already killed him. In Thinkorswim, for example, I will monitor my buy watch. And this doesn't count because I just put this is this weekend's buy watch. And I'm able to see week to date to see how a stock is doing. And I'll do the same on my own positions. And I could see over the last week the small gold player, and I don't have TZA anymore. I don't know why that's still sitting there. Were my big losers. I don't have TZA. Tandem was up 22%. LABU was up 28%. That's supposed to be GME. Ignore that one. Netflix was up 14%, and Verisite was up 13%. So this is a great tool. I got to change these. So I can see how I've done from the beginning of the week. And I can monitor things like kahunas, high close dojis, pocket pivots on my positions or others. On that note, I guess one last thing is I do take all these stocks in my buy watch. Because it's a buy watch, does that mean Jeffrey buys them? It means Jeffrey sticks them into a watch list with a radar screen. And then I watch them during the trading day, looking to see signals popping up that might compel me to come and look at buying them. These would be pocket pivots. This is stocks in a squeeze. These would be buy list stocks that have a mobile breakout from a squeeze. Buy list stocks with a viable gap up. And these are all Fridays. It doesn't matter what they do, but during the week I get the same information. And I'm in the process now of updating here, but we should see by the end of the day when all my earnings are. On that note, I'm going to say good night. Have a great weekend, and talk to you next week. I hope I don't piss people off by showing my account. I do that so, what validity does somebody have who talks about what he does if he really doesn't trade? I trade. I lose, I win. I lose, I win. What I care about is how much money I have left at the end of the day. Good night, everybody.